Hello, everyone. I'm really happy to be here because usually when I tell people I work in cyber insurance, they just get up and stop talking to me and leave. So I'm really happy to see you all here today. As Jeremiah mentioned, I work for a cyber insurance provider, but I'm actually technical. I started a company called Binary Edge that maybe some of you have heard about that scans the internet, does large-scale data collection. I've built network scanners. I've built web application scanners. I still do that on the day-to-day, but I work at a cyber insurance provider. And my objective for my talk today is to tell you a little bit about what is cyber insurance, what it covers, but also talk a little bit about some of the myths that I've heard from talking to colleagues in the cybersecurity industry. Some misconceptions maybe that people have about what we do, how we operate, all of those things. So let's start with the basics. What is cyber insurance? Essentially, it's a PDF. We give you a PDF that you put on a shelf, and when things go wrong, grab that PDF, find the claims number, and call us. But in reality, it covers lots of different things. People usually focus on ransomware, but it actually covers data breaches, network outages. If someone breaks the window of your car and steal your company laptop, that's also covered. But it is not a replacement for cybersecurity. Again, it's a risk transfer mechanism, but it is not a replacement for cybersecurity. The other thing you need to take into account when you're talking about cyber insurance is, just like in InfoSec, we have people that care about web application scanners, mobile security, network security, OS security. You need to understand who you're talking with. We have MGAs, we have carriers that will care about a single company and whether they had an incident or not because they might need to pay a claim. But if you're talking, for example, for someone from reinsurance, they only care about big things. They care about the CDKs, the Change Healthcares, because they only pay things that cost $1 billion, $2 billion. So when talking to someone from cyber insurance, understand who you're talking with because different entities will care about different things, just how we do in InfoSec. So as I mentioned, a cyber insurance policy covers multiple things. Third-party security and privacy, event response, cybercrime, ransomware, all of those great things. But why do we need cyber insurance? Essentially because everything, everywhere now uses technology. You think about something as simple as a church, for example. They might have a website, therefore they rely on technology, therefore they might have some type of exposure. And so we have churches that buy cyber insurance. Essentially, anything that involves technologies creates an exposure of some sort, whether it be a CRM or your website, your blog. Again, technology might lead to some type of exposure. And over time, we're seeing, actually this slide looks a little bit off, but essentially that companies over time are deriving value from intangible assets. It stopped being about physical things that you can grab, and it started being about data, the privacy of your customers, and these things are continuing to evolve more in this direction. And then along came cybersecurity, where honestly, it's a little bit different of everything else that exists in insurance. Technology is super fast. It evolves and changes dynamically with high volatility. Risk itself is also dynamic. We see companies that, for example, on day one are secure. The next day, a vulnerability comes out, and all of a sudden, they might be hacked. And that sort of thing doesn't quite exist in other insurance lines. Or, for example, that a single individual might have found a zero-day or vulnerability of some sort, and they can all of a sudden attack 1,000 companies. That's just not something that we see on other insurance lines. And the reason why I'm mentioning this is because this has been a learning experience for InfoSec, but actually has been a learning experience for insurance as well, because insurance was not prepared for how cyber works. They were not prepared for how our industry works. So the insurance industry must also shift. The past was tangible assets that are well-defined. The distribution is your normal brick and mortar. And the future, and honestly, even as we are today, intangible assets, the risk is constantly changing, and there's a lot of distribution over digital channels. So how is the insurance ecosystem going to evolve? Underwriting right now, in many places, it's still done by humans. However, to do underwriting correctly in cyber, you need data. You need lots and lots of data. And guess what? We as humans are not that great at looking, say, 10,000 rows of data and figuring out if there's a pattern, if there's something important in there. But machines are. So we use machine-augmented underwriting. The cadence also changes, because typically you buy your insurance once a year. Well, with cyber, as things are constantly changing, you need to be constantly worrying about, hey, are there new things I need to be fixing? Are there new things I need to be patching? Are there security controls that I should be using? The inputs change a lot because, again, it's data-driven. So we're talking about, hey, what sort of security controls do you have? Do you have a strong password policy? How many people work at your company? How many assets do you have exposed to the internet? So it's trillions and trillions of data points that we want to use to correctly underwrite. Distribution moves from paper to digital forms, and customer engagement also changes from low touch to high touch. And I'll come back to this in a little bit. So how does a modern cyber insurance provider actually underwrite? Again, just as I explained before, you need to understand who you're talking with. If you're talking to a classic cyber insurance provider, they'll give you a piece of paper, you'll fill it out, all of a sudden you have a policy, congratulations. But if you're talking to a modern cyber insurance provider, they actually look very, very closely to a tech company, in that they'll use internet-wide scans. They will collect security controls data, usually either in a questionnaire or on a web form, and they will use those inputs to decide how they're going to price your policy. They're going to continuously scan you and send you alerts and notifications. They'll actually have security engineers. So let's say, for example, they tell you, hey, you need to implement MFA on this web application. You can actually go to your cyber insurance provider and say, hey, can I jump on a call with one of your security engineers for free, and they can help me set this up? It's just very, very different from how classic underwriting works. Everything is data-driven, as I mentioned before, and we're constantly evolving our understanding at risk because we observe risk at scale. And I'll go into a little bit of this later. So the lifetime of a quote goes like this. A broker will send us a quote. Typically, like the most basic quote inputs is the things you see at the top, essentially company name, a domain, an industry, the number of employees, revenue, and whether they want 1 million, 2 million, 5 million limit. And we grab those things. It goes through a phase of risk selection, and out of risk selection, it can come out with a clean quote, a quote with contingencies, or a decline. Then we price that risk. Then, after we bind the risk, it goes into a risk maintenance and reduction mode, meaning the company becomes our policyholder, and we notify them about things every single month that they need to fix. And then when the renewal time comes back, we quote that company again with the new price, and they just stay in this loop. But let's dig into a little bit of underwriting. So the broker sent us the domain, blah.com. What actually happens behind the scenes? So we start a scan. And the scan starts with enumeration. For blah.com, we're going to find every single subdomain that exists, every IP address, all of those things. Then we're going to run the company name through all sorts of search logic, because we want to find, does this company have subsidiaries? Have they acquired any other companies? Why? Because one interesting thing about cyber insurance is if a company owns more than 10% of another company, that subsidiary is actually potentially covered by the policy of the main company. So when you're filling out your paperwork for cyber insurance, make sure you're listing all the domains, all the acquisitions your company has done. But our enumeration process does this, finds all IP addresses, all subdomains, tries to identify acquisitions, subsidiaries, and vendors, and then it's going to go and find, going to do actual network scans. It's going to find, hey, which technologies is this company using? Do they use multi-cloud? Do they have any critical vulnerabilities on assets currently exposed to the internet? Yes or no? Do we find them to have malware infections? And we use and compute a underwriting payload and then decide what we want to do with all of that data. Do we want to quote? Do we want to price up? Do we want to price down? Do we want to decline a company? If it's a renewal, in a modern cyber insurance provider, any modern cyber insurance provider will give you an attack surface management platform, and they'll just pull the data from there. So it's much, much faster, and they also have a much more in-depth knowledge of that data as well. So one of the interesting benefits of cyber insurance as well, especially on the small space, what we see is you save some money because we see a lot of companies paying for TPRM, third-party monitoring, and usually cyber insurance providers will actually give you that for free as well. I mentioned before that our view of digital risk is constantly evolving. To give you an idea, this is a little bit how we used to do things in 2023, when we could look at two companies that look exactly the same revenue, same industry, same everything, but then if one of them had a vulnerability, a critical vulnerability, something we know is under current exploitation in a single asset, we would decline that company. However, we have started to evolve how we think about digital risk. We're using a lot more data. So today, we have machine learning models, for example, that will classify the assets. It can look at an IP address or a domain and say, this is a marketing website, and it's actually in a development environment or staging environment. It's not even production. And then we make a decision. If we find a critical vulnerability in that asset, we might make the decision it's actually OK for us to write this risk, because we know that we're really good at getting customers to solve these vulnerabilities. So when they enter that risk maintenance and risk reduction phase, we will just work with the customer to get it solved. Or maybe we do see that in a production environment, they have an exposed MongoDB database, and we just don't touch that. We still decline it. The other thing that we're getting better at as well is helping our broker friends, which is a broker will typically come to us and say, hey, these guys are looking for a $2 million limit. And we can now, because we have so much claim data, we can start to look at the type of company that's applying for cyber insurance and say, hey, we actually see that companies of this size and of this type with this technology stack typically have incidents that are higher than the limit that you're buying. So we actually advise you that you tell your client they should be buying X amount of coverage. And of course, for all of these things, it's powered by a lot of machine learning models and a lot of data analytics as well. So as I said, cyber insurance companies actually look a lot like tech companies. So let's go into a little bit of myth busting. One of the myths we hear a lot is, if I buy cyber insurance, I don't need to invest in cybersecurity. And I know this is something that pisses off a lot of cybersecurity companies because they're looking to sell products and services. We get it. We're not trying to replace you. Our message is always the opposite of this. Cyber insurance actually requires companies to have a minimum set of security controls. If, for example, you don't have MFA on email, good luck getting coverage today, or at least good luck getting coverage at an appropriate price. It's just not going to happen. And there is no other entity that can have the influence that a cyber insurance carrier can have in the security of a company. That just hasn't existed before in cybersecurity. Because essentially, these days, many companies require, for contractual reasons, cyber insurance coverage. The carrier can actually go and say, OK, we'll sell your policy, but you need to take this RDP off of the internet. You need to enforce MFA on email, and you need to enforce MFA across all of your web applications. Oh, and by the way, we found that you have your VPN admin panel also exposed to the internet. Take that and put it behind something else. Isolate it. And there just hasn't been another situation where we can force companies to care about security. But now we can, because they need insurance, and we can tell them what those minimum security controls look like. And of course, at the end of the day, when things go wrong, you have your cyber coverage. And things will go wrong. If there's something we know is like, at some point, any company will get hacked, no matter how much you invest into security. So treat cyber like all the other business risks that you have. Figure out, hey, this is where I am. This is how much I spend in security. This is the potential dollar loss my company might take. And figure out how much you need to buy of insurance. Again, it's a business risk, so treat it like all the others. Second myth, cyber insurance claims aren't paid. This actually started from a very specific case, the Mondelez case, where Mondelez filed for claims with Zurich Insurance for NotPetya in 2017, and Zurich disclaimed it, so they didn't pay for that claim. But the interesting thing is, like, Mondelez actually didn't have cyber insurance. They were trying to file it under their property insurance. But because people saw that it started with a cyber attack, indirectly people assumed, oh, cyber insurance doesn't actually pay. These guys are refusing to pay their cyber insurance claim. But it was never a cyber insurance claim. The reality is that the large majority of cyber insurance claims do get paid. And I actually have some numbers for this. This is related to us. On the impact of cyber insurance, we got our customers to fix 74,000 critical vulnerabilities. To give you an idea of our definition of a critical vulnerability, we run a large network of honeypots that pretend to be running the technology stack of our policyholders, and we monitor which vulnerabilities are actually being used against the honeypots. On the other side as well, when there's a claim, our incident response team goes in and helps customers with forensics and restoration. So what we get out of those two things is we know exactly the real vulnerabilities attackers are using. So those are what we consider critical vulnerabilities. We don't just email customers when every CVSS 10 comes out, telling them, hey, go patch all the things, because our customers would get confused, they would get overwhelmed, and they would stop paying attention to what we tell them. So it's only when we know that are real things that are being exploited, and we got our customers to fix 74,000 of them. We also saw that companies that follow the recommendations we give them had 64% fewer cyber claims. On top of that, for FTF, funds transfer fraud, we were able to recover $86 million in funds. We paid $285 million in claims, and we handled 52% of the incidents at no cost to the customer. So these are just some benefits. Cyber insurance does pay claims, and there are benefits to it outside of just having the coverage. Another myth we hear a lot is cyber insurance is fueling ransomware. And we disagree with this. We get this a lot from people in the industry, but fundamentally you need to understand that paying that ransom, one, is an incredible small portion of what typically gets covered, like what is actually paid out in an incident. And number two, anytime there is an incident, we actually send a specialized team because we don't want to give money to criminals. So paying is a last resort. We try to get our customers restored. We try to help them with forensics. We try to help them understand what happened. All of those things because none of us wants to give money to criminals. So we actually help customers not pay. Of course, there are situations where it's unavoidable, and even then we try to negotiate the price of the ransom down to as little as possible as well. And again, I can tell you a type of situation where we've helped. We had a company where they had backups, and unfortunately the system administrator that handled the backups had been fired just a couple of weeks or something ago. And they didn't have the decryption key for the backups. And we actually ended up tracking the guy that worked there, finding his phone number, calling him. He had the decryption key still stored, gave us the decryption key, and we helped the customer get their restoration going. Another case, peak of COVID, absolute peak of COVID. One of our incident response team puts a mask on, gets on an airplane, and stays at the customer for a full week, risking getting COVID, all of those things to help them with restoration. Again, these are the things that people don't see from the outside, but these are things that cyber insurance does help with. And none of us are, again, trying to pay for ransoms. Again, if you have cyber insurance, only 40% of the policyholders who experience ransomware actually pay for the demands. And that's, again, because they have help throughout the process. The moment they see a ransom happening, they call our claims line activates our incident response team, and the customer has help throughout their lifetime, not just during when they're clean and they don't have a ransomware event going on that we're sending notifications. Even at the worst day of their lives, we're there, we're helping. We helped negotiate ransom demands by 84%. And by the way, that's one of those things where you only get good at it with practice. We now have scripts where we know, hey, we negotiated down with this ransomware group, and here are the tactics that we've used. So we have playbooks for every ransomware group on how to talk to them, how to get it reduced, how to get to a place where we give them as little money as possible. And yeah, essentially that myth of ransomware being fueled by insurance is just not true. One more thing I would like to talk about is how can cyber insurance help cybersecurity? I've talked to many of my peers in the cybersecurity industry, and it feels a little bit like a competition, but it's not like that at all. We're actually here to try and help you guys. If you're a CISO, you have a budget, right? And you got to pick what are you going to invest those dollars in? And guess what? If you are looking at a Gartner or a Forrester and you're just like, oh, this thing is in the top quadrant, that's the thing I'm going to buy, that is not necessarily the right way to pick things. Talk to your cyber insurance provider. A cyber insurance provider sees the claims and losses for hundreds of thousands of companies. They see things at scale. They'll know what security solutions actually work, what doesn't work, what are hackers actually exploiting, and how they're getting in. And they will be able to help you and advise you on picking the right things that will help save your company. And not targeting any number in terms of dollars. It's literally pure direct advice on good things that will help you. So this is essentially to say that cyber insurance can help with the problem that we have, in my opinion, which is the vendor overload. Obviously, we're at Black Hat, which is one of the biggest vendor halls. We have a ton of vendors down there. How can you go down there and pick, hey, you guys are the right vendor for me? You are definitely solving a problem I have. You need to look at a large scale of events to be able to really understand what is happening. And that's the thing about insurance. Insurance plays in the big number game. So it allows us to gather data about vulnerabilities, security solutions, which specific vendors work. It brings essentially a little bit of science to the art that is sometimes InfoSec. Essentially into data-driven insights. These are some examples. This is from our cyber claims report. For example, we found that, hey, if you have a Fortinet VPN exposed to the internet, the panel, you're actually twice as likely to experience a claim in 2023. Or for example, if you use RDP exposed to the internet, 2.5 times to experience a claim. Again, these are those insights that we get at scale. And it becomes even more interesting. So for example, I'm sure a couple of you heard about MoveIt. MoveIt was an incredible, interesting case for us because, again, we run these honeypots, and we had some honeypots that were emulating MoveIt. And in November 2022, we saw what we call the yellow pages scan happening. And a yellow pages scan is essentially when a hacker doesn't have a vulnerability, but might be very close to, and they start to look at the internet, who has this technology? Why? Because when the technical details or the vulnerability comes out, they know exactly which IP addresses to target. What this means for us is when we start to see these yellow pages scans, we grab the payload we see on our honeypots and we pop them into our scanners. And all of a sudden, we're able to identify the policyholders that have this technology, and we immediately message them and tell them, take this off the internet. Put it behind a VPN, put it behind your zero trust solution, because something is coming. And by the way, often we don't know what it is that's coming. We just know that something's coming. And that's what happened with MoveIt. And we told our policyholders to put their MoveIt instances behind a ZT solution or a VPN. And when June happened, we were able to notify them very, very quickly of the specific vulnerability because we already knew who used MoveIt. And we ended up not actually having any direct first-party claims from MoveIt thanks to this. And by the way, we see multiple situations like this. This is just one use case out of many that I could show to you about different vulnerabilities where we get early visibility and tell customers what they can do. We also focus a lot on ransomware, but what I would say as well, what we see, again, from a scale perspective, is FTF is incredibly painful. And I don't necessarily know that we have enough attention in the industry of people tackling this problem. Frequency on FTF is much, much higher than ransomware, and of course, ransomware severity is higher than FTF. And the interesting thing about FTF, again, the modern cyber insurance provider has a really great track record on getting funds clawed back. So often, again, if you have an FTF event, if you don't have cyber insurance, you're going to maybe try to call your bank, maybe going to spend God knows how many hours in the wait line trying to get them to solve it for you. A modern cyber insurance provider has points of contact at the major banks, has points of contact at law enforcement, and the moment a policyholder picks up the line, talks to the claim team and says, hey, I just had an FTF event, and it was for this amount, blah, 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 here's what's happened, we immediately reach out to those points of contact and get your money back. we have an incredibly high success rate if we're contacted in the first, I think, either 24 or 48 hours. I'll have to check on that stat, but an incredibly high success rate on getting all the funds back to the customer. Some final thoughts on this. The future of these industries, and I mean the cybersecurity and cyber insurance industry, is going to get a little bit blurry. Like, there's not going to be lines. And that's because we're starting to see cyber insurance providers dabble into the cybersecurity market. Cyber insurance providers right now are big fans of MDR, and many of them are starting to offer MDR as a service. By the way, the reason why they're targeting the MDR, they look at events at scale and found that MDR is a type of service that severely reduces the cost of a ransomware event, or even the frequency that it might happen. Incident response has already been a pretty big tool in an insurer's toolkit. And again, many of the modern cyber insurance providers are starting to provide products and security that you currently pay for, and they'll just start to come included with your policy. TPRM, potentially financial monitoring, vulnerability management. I would argue that if you are a startup or a company that has a product or service that actually makes a difference in security, you need to be finding cyber insurance providers to partner with, because they are a potential great channel for you guys. Again, any day-to-day cyber insurance provider has access to hundreds of thousands of companies, and if they're actually able to validate that your solution works the way it does, they'll be great partners to you. That's me. Questions? I think you need, I don't know if they're bringing the microphone or if you guys need to go to the microphone. I actually don't know. What is the question? If you want to shout it out, I'll repeat it.
Oh, maybe does this mic work?
Yeah, perfect.
So another bullet point for your list of benefits is how are you going to pay the ransom if you do pay it? Pay it in crypto, right?
Yeah.
How do you convert your cash to crypto? You can't just convert $1 million in cash over to crypto overnight and pay. So you guys manage that.
Yeah, you're 100% correct. So to give you an idea, we don't actually do the ransom payment, by the way. We have a partner that helps with that. We will cover the bill, but we have partners that specialize in just that, in holding high amounts of crypto that they convert from money into the cryptocurrency, and they'll help us do that transaction. But we don't actually do that maintenance of cryptocurrency ourselves.
Well, in the end, that's what happens.
Yeah, absolutely. Yeah.
Especially like in smaller businesses and stuff like that, do you find the fact that as an underwriter, these businesses that are getting policies from you, that security providers or security professionals like us would actually affect the decisions, like how much the quotes are and such like that, or do you not even take that into effect?
We absolutely do. Whoever manages risk at the company, and typically is the CFO, or maybe you have an actual chief risk officer, they should absolutely be talking to the technical people. They should be talking to the sysadmin, to the SecOps, to the security person, because one, they're the only people that can give you accurate data to fill out the insurance form, and you want it to be accurate for that coverage, but also because if there are good security controls you're implementing, you want to explain that to the underwriter on the other side, because the forms are very standard, and maybe there are things, for example, I have RDP, but oh, by the way, I actually have a brute force mechanism that stops brute force, and I have MFA enforced on it. Those are things that will be outside the form, but that you want your underwriter to make sure he knows about it so that they can properly credit you for it. So absolutely, the technical people in the room, you should be talking to your risk managers, CFOs, and helping with that cyber insurance acquisition.
Just to begin, thanks for the presentation. You had just mentioned that sort of universally it's understood that MDR services have an impact in lowering risk, just kind of generally speaking. I'm curious, at what point do you think that policies will start reflecting that requiring MDR as a baseline versus, say, XDR, which is a tool set that a lot of people don't have capabilities of being able to manage?
I'll give personal opinion. This is not opinion of my company and potentially maybe not of my peers that are sitting in the front row. I don't think you're going to get to a situation where it's going to be mandatory. We see that in some situations with MFA. I don't think you're going to see the same with MDR. What you're going to see is more crediting and proper compensation in terms of premium discounts or increased limits for the companies that choose to buy a proper MDR provider. And by the way, that's a detail as well that I forgot to add, so thank you for asking. Crediting for MDR isn't just for any MDR. You can't just go to your cousin and ask him to open a company that sells MDR and you're going to get crediting. It doesn't work like that. In insurance, we actually look at the actual vendor and sometimes even the product or service you're buying at the vendor to give these creditings.
And as a follow-up to that, do you see that they are two separate streams or a single stream for instance, the pre-breach MDR and then post-breach IR? So thing that I'm really asking is, do they have to be on panel, for instance, with Coalition or with another vendor before you would really consider their MDR as in the scenario you just mentioned about giving discounts on premiums?
They don't need to be on panel with Coalition. We gather data at scale about which MDR provider our customers use, and then we look at how it affected the claims that we essentially paid out. And that's how we do the data-driven decisions on which, do we see patterns of certain MDR, EDR, security product service providers reducing costs, yes or no, and that's how we make our decisions. We have no, we're not biased towards any vendor. We don't actually care. It's what the data is telling us.
Awesome. Thank you very much.
Thanks. Yes?
Good afternoon. You mentioned earlier that cyber insurance providers have incident response support capabilities, right? I wanted to see what would be the limits of incident support instead of a DFIR provider, and seeing what would be the best strategy to have those coalesce with each other in terms of what would an insurance provider help support versus a DFIR provider in an incident?
That's a really great question. I don't have an answer for it, but what I can do, I can introduce you to our incident response team and the right people that can help you get a better understanding of that. So please feel free to reach out to me after, and I'll put you in contact with the right people.
Thank you.
I have a question about, do you have any guidance on some of our business partners? We require them to carry cyber insurance, and due to the changing nature of the threat landscape, the cost of premiums have increased. And some of our business partners are coming back to us and saying, hey, they can't get cyber insurance. What kind of guidance can we give them? Say, hey, we need you to carry cyber insurance, but who do we turn them to?
I won't say company names because I'm here to present and teach you guys not to sell my company. But I'll say this. Get backups, get MFA, and take crap off of the internet. Do not have assets that you don't need exposed to the internet. Those three things, basic, cheap, and will get you a massive price reduction if you're working with a proper modern carrier that does decisions based on data. So ask your broker, if you can ask your broker anything, ask them to work with a modern cyber insurance provider, not one of the classic ones.
Hi, thank you for the presentation. I was curious if I could ask you about how certifications impact cybersecurity, if at all, and which ones?
Sure. You're talking ISO 27001, PCI DSSs, all those sort of things. So one, they're compliance, they're not security, two different things. I would say the way they'll impact is probably just, they'll make it easier for you to get cyber insurance. And what I mean by that is certain carriers will take those, essentially your certification confirmation, as a replacement to you having to fill out forms. The ransomware supplemental or an application form, we'll take those as a replacement. And of course, depending for certain certifications, there are certain security controls you must attest to having, and you'll just get credited. But it's not because you have that thing. It's more because of the security control that you have. So meaning if you didn't have the certification and you filled out the cyber insurance form and you said, I have this thing, you'd still get that credit. It will just make your life easier. That's the benefit there.
Thank you.
Hi, thanks for the presentation. This is David. My question is how to quantify the risk. For some kind of risk, one tool maybe says a very serious problem, but maybe others say it's okay, it's all a medium. So how to justify and to pursue the customer agree with the standard from the insurance company?
Yeah, that's a great question. It's a science. It's actuarial science. So my team, the research team, has data scientists, actuaries, software engineers, security engineers, and they all work together, bringing their different, paths of life into trying to understand digital risks. So it's a combination of us looking at, hey, we know this company uses this EDR, and we know it's configured in this way, and we know it led to this amount of loss that we paid out. And it's essentially just continuing to iterate on all of these things, like for all this technology that the company used, for all these things that they had, where did the loss end up? And you grab that very simplified way that I just did now, look at it at scale. Again, we have more than 100,000 customers, and you start to find these little patterns of, hey, this vulnerability, the customers usually are really good at fixing it in X amount of days. This technology, when they have it, we see it cuts loss cost by 20%. These patterns just start to emerge when you start to look at the combination of technology stack, vulnerabilities, and losses at scale. These just patterns just bubble up. And we have a team that just does that full time.
Yes, thanks for the answers. But still, for me, we have, for example, we have the CVSS, the score system. We can understand the vulnerability, how serious of that. But once we're working on that part, there's lots of the flexibility. You send some score, maybe you get 7, you get 5, maybe, it's all reasonable numbers. This, if we go to the insurance for the money, this will, the price will go up and down. So maybe the variance is quite a lot.
So the price does go up and down, and it changes depending on, honestly, sometimes the choices the customer can make, right? Because we have customers that prefer to go, I don't want to fix anything that you guys are telling me, and I'll just pay a higher premium. We have customers that prefer to say, I'm going to fix this and this thing and land on a medium premium. And we've got customers that go, give us 30 days. We're going to fix everything. You guys will re-underwrite us, and we give them a lower price. But again, you've got to work with a modern insurance provider to be able to get all of those options. It depends.
Yeah, sorry, one following questions. If I'm the CISO of a company and I want to allocate some budget for the cyber insurance, how do I do the plan?
Talk to your broker and ask them to put you in contact with a cyber insurance provider, a modern one, and jump on a call with them. They'll be able to advise you.
Okay.
And for free, by the way. That will come at no cost if you're working with a proper insurance provider. 1 minute. Do we got one more question? One more.
So this is 3 parts. I wanted to go back to one of your slides where you said, ta-da, yeah, I'm doing that. The 40% statistic that you cited, is that overall for all cyber insurance, or was that a company statistic?
That's for Coalition, the company I work for, and it's the company I have data to present.
Okay. How has that number changed over the past 10 years? So you didn't produce a trend line.
We do have a trend line. I don't know how the trend line has gone, but I'm happy. Again, if you reach out to me, I'm happy to get you that data because we produce every year a claims report that comes with those numbers, so it's just a matter of looking at that.
So if it's trending down, good. If it's trending up, not so good. How do you anticipate that number changing over the next 10 years, and what are the 3 top factors that you see influencing it?
I'll ask you
last question.
I'll ask you for one favor. Give me a minute to think, and I'll answer after I get off stage. Thank you. All right, thanks, everyone.